I'm Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, just the best podcast ever, I think. Let's get rid of all the qualifiers. It takes too long, don't you think?
Quite
This
a
is
leap. Best ever.
yeah,
Uh,
no.
Based on the number of hours I spend listening to other podcasts, this is maybe like a top five, but I don't know about best ever.
Is do you devote any hours to listening to this one or just doing the
I,
podcast?
okay, my anxiety when that creeps up and I'm like, oh no, I said something bad or wrong. I will go back and I will re-listen to episodes to make sure that I did poorly. But every time I listen, or I didn't do anything wrong, but every time I listen to it, I'm like, oh, those guys sound pretty smart. So,
Yeah, yeah, true. Yeah.
but
I
as a
mean, I can tolerate listening to us more than watching the YouTube version, I think.
I disagree. We're some handsome fellows. I think the YouTube is well worth watching.
Yeah, yeah, for other people. No one likes to watch themselves generally.
No.
Yeah. Um, by the way, I wanted to ask you at the top, what is the holiday that gives you the most angst?
Guess Thanksgiving,
Really?
but that's typically because I'm doing a lot of the cooking.
Okay. Yeah, that makes
And
sense.
I had one over salted turkey like 3 years ago, so that still gets to me
Yeah.
because I dry brined it, but the bird had been pre-brined, so it ended up being extra salty. That
Yeah.
was a major mistake.
That makes sense. Mine's Halloween, and it's only become that in the last 4 years since we moved to one of the busiest or most trick-or-treater trafficked roads in probably the whole entire state of Vermont. We are within the trick-or-treater window there. We get 300 or so kids, 400 kids to our door. So the preparation is weeks. All the candy you have to buy. Well, preparation is lots of time, lots of money. Candy, I bet we'll buy like 1,000 pieces of candy. Um, adding to our decorations every year. We sort of have to, um, play host a little bit because we're sort of central place to our kids' friends and their families. It's all fun when it arrives, but the weeks before, pure angst, pure. Um, it's just really busy.
My daughter and I went to Home Depot last weekend looking at maybe getting one of the 12-foot skeletons.
Yeah, we did.
Uh, we opted against it. I didn't really have a good flat spot in our front yard, but we have our Halloween decor up. My hack, if anybody is listening and they're like, let's put up a little bit of Halloween stuff, but it's not spooky enough. Just replace like your front porch lights with red light bulbs because it immediately becomes extra spooky.
Yeah.
Like that is the biggest hack to make like cheap and low effort decor look spooky and haunting.
Yeah, that's a good one. Yeah, we've added to our repertoire. We've got, graves out there. My son bought like a pumpkin head with like arms coming out or on either side that looks like it coming out of the ground in front of one of the tombstones. Got
We
like
have
giant
a
spiders and things. Yeah.
we have a gravestone with the thumbs up skeleton hand in front of it.
That's
But
good. Yeah.
yeah,
Um,
you guys are on a different level on the East Coast with this, especially you being on that street.
yeah, yeah, it is. Once it arrives, it's fun, but lots of the weeks prior are sort of angst-ridden. Okay, let's move on to investing. Speaking of angst-ridden, what is on tap for today?
We are going to talk about earnings. Tesla, Netflix, Intel all reported. Still early in earnings season, but results are pretty good so far. We are going to talk about new fears with the China trade war, and then those sort of subsiding a little bit as the president is going to meet with Xi this weekend, I believe. We're going to talk about um, the delayed inflation data that came out this morning, the only data we'll get for the foreseeable future. We will talk about gold and metals briefly imploding and then seemingly stabilizing, and also a new batch of meme stocks that had their 15 minutes of fame.
Yeah, the 15 minutes may be up already. We'll see. But before that, as always, we have our defend the take. And Brad, you're up today, and your take, for which you have 96 seconds to defend, is that industrial automation is the next megatrend. Again, 90 seconds, go.
So the AI trade, right? That's been the big driver since the October 22 bottom. Everything has prioritized data centers. All the investors have prioritized data centers. Software companies have been outperforming. The problem with that is it's a little bit short-sighted. It just looks at, interest in software, but if developments with artificial intelligence are as big as I think everybody is sort of banking on, that'll end up eating software. We've already seen it with Adobe. They've been underperforming since all the new AI tools for image editing and image generation have come out. One place that is being a little bit underserved right now is industrial automation, right? Bringing back manufacturing has been a big push of this administration. Um, the trade war with China, the their punishment for us is rare earths. We're threatening them with like software exports now, but investors are not treating this as something that's got a lot of potential upside when it really does. The National Highway Transportation Safety Board just lightened their rules that might allow for some automated shipping. Um, Two stocks stand out: Fanuc and Teledyne, FANUY. They're up 22.5% so far this year, but they're down 22% in the last five. Teledyne is up 13.9%, up 58% in the last 5 years, compared to the NASDAQ, which is up 116%. If AI pans out, I think we're going to have sustainable upside for these industrial automation companies.
Okay. Just a few seconds over, but that's all right. Yeah, not a bad take. And yeah, I mean, investors who we keep hearing about all these bubbles, AI, gold, which we'll get to. So investors, I'm sure, are looking for what the next opportunity is, and industrial automation is a good one. And Fanuc, is that a Japanese company? Is that right? I feel like Carl Delfeld has recommended that
He,
before.
yeah, he's written about it before. Yeah, I think they are either that or Korean,
I'll look it up while you vamp.
but
But yeah, I
Japanese,
like
yeah.
the tech. Japanese, yeah.
Yeah, yeah. So, I mean, it's more along the lines of, okay, well, if let's say the AI thing pans out, right? Like, what does that actually look like down the road? Um, Presumably that devalues software. I don't need Microsoft Windows if ChatGPT can spin up a Windows clone for me in a browser. They just released OpenAI just released their own browser. It's built on a Chrome framework, but if the progression of software is these AI tools can do everything for you, well, where's the real opportunity? Because it's not going to be in software. You're just going to commoditize software even further. But I do think that there's an opportunity in industrial because that has been also a big push by the administration. They're not out there screaming about how they're going to bring back software jobs. They're out there screaming about how they're going to bring back manufacturing jobs. They're going to prioritize shipbuilding. They're making trade deals with Australia for like rare earths now, because of threats from China. So all of that is sort of operating in the real economy and not in the digital economy. And there are a lot of promising developments. Amazon notably came out or at least had leaked that they were going to replace something like 600,000 jobs in the next 8 years, I believe, by 2033 with automation. Somebody's going to have to build those robots. Somebody's going to have to build optical sensors. Somebody's going to have to deploy them. I think there's an opportunity there if this pans out the way it seems like the sort of brain trust behind this is pushing it.
Yeah, good take. Okay, let's move on to our number one topic for today. Earnings season is heated up, and as you mentioned, Brad, results have mostly been good. But a couple big name exceptions this week in particular. Both Netflix and Tesla missed on earnings. Netflix missed by 15%. And Tesla, their profits declined 37% year over year, and they also missed estimates, although I think the revenues were higher than estimates. Um, and then there's Intel, which fared a bit better. I don't have all the data on that one. Maybe you do. But any, any early takeaways? Last week you talked about the banks. Any takeaways from this week's earnings batch? Those are two high profile companies to miss. Tesla, less of a surprise. Netflix is a little bit more surprising, although there's a tax issue that was involved there that may have caused a lot of it.
Yeah, I think, I mean, investors are maybe overreacting a little bit to
Yeah,
this earnings season would be my biggest takeaway. Netflix has a $619 million tax bill from Brazil
right.
where it sort of goes back to 2022. They reported earnings of 587 a share versus 694 expected, and I think the bulk of that is due to that tax write-off or the tax charge. Shares fell like 10% as a
Yeah.
result of it. Netflix or Tesla, like you said, they missed their income was down 37%. They fell as much as 12% before bouncing back. They're flat on the week now.
Hmm.
Um, and then Intel, they they were up 6% in early trading before getting back to, I think, close to flat for the day. They reported revenue of 13.7 billion versus 13.15 expected, and their fourth quarter guidance was good but weak, like 13.3 billion in revenues, I think was their midpoint. One of the things that sort of caught my eye with Intel was they're trying to figure out how to handle the accounting treatment of the government investment.
Yep.
And that allowed them to retire a bunch of debt, but they're also reporting an adjusted loss next quarter for shares that they hold in treasury. Um, so I don't think we can like reach any kind of economic conclusions based on the companies that are reporting, but it does certainly seem like investors are primed to at least overreact to the unexpected. Um, Intel's tax treat or Intel's accounting treatment of the investment being one, the Netflix tax thing being the other.
Yeah. It- it's funny that just a 37% drop off in profits for Tesla is like it wasn't shrugged off, but it's kind of incredible how far the bar has been lowered there, you know, um, where they for years, their stock price grew because they had a knack for outperforming expectations by a wide margin, and and profits were always going up. And now, people the fact that it stabilized this quickly after a report in which they reported a 37% profit decline, people were like, "Oh, wasn't too bad." Tells you how, you know, far it's fallen in a way, but then again, the share price really hasn't. So
It's
I don't know.
trading at
I'm starting to fall into a nihilistic
yeah,
uh, state of mind with everything market related at this point. Like nothing matters, and the stocks are just going to go up eventually, which is, it's better than the reverse, of
yeah,
course.
I mean
Yeah.
that's been sort of I think we've talked about Tesla earnings before, but that's always been my thing with Tesla's earnings or car sales. Like they trade at 295 times earnings right now.
Yeah.
Um, they're a $1 trillion company that did 28 billion in revenue and generated 1.37 billion in income in the quarter. They make $4 billion a year, but they're a $1 trillion company. And like, okay, well, this stuff doesn't seem to matter. It doesn't matter what's going to happen. It's always the narrative to sort of fit whatever the pre-selected investment preference is. Um, I don't. I mean, Tesla should be worth $30 a share if it were a car company, but there's
Mhm.
always Optimus or there's SpaceX or there's XAI. Um, I mean, even something like Google has like their moonshot division, where they're like just it's experimental tech, and maybe like that's a better comp for Tesla. Um, right now, Google trades at 28 times earnings. So like maybe we don't value it like a car company. Maybe we value it more like a Google. Um, but Yeah, I think the nihilism is not an unreasonable response to it. There's not a lot of rationality in the way that Tesla's share price moves. It's more dependent on how much optimism you can generate as an investor. Uh,
Right. But as who was it that said markets are never wrong, opinions are? Is that
I
Jesse
don't
Live?
know.
Yeah, it's a great quote.
It could be.
So the market's not wrong until, people decide that it is. But for now, it's not. Okay, let's move on to number two. This, hot off the presses, or cool off the presses, I should say. Inflation came in slightly cooler than expected. This is a long-awaited CPI report. So we've had no data with the government shutdown. 3% inflation in September. 3.1% was expected. But that 3%, we're above the 2%, the magical 2% realm now for the Fed. Although I think had the take, which I think is a good one, that 3% might be the new 2% for the Fed a while back. Highest reading since May for headline inflation. There's some good and bad in there. Egg prices. The egg prices are down more than 1% year over year. I didn't realize that.
Fantastic.
Yeah. And 4.7% month over month. But then coffee up 19%, beef and veal 14.7%, ground beef 13%. Candy. This is adding to my angst about Halloween, up 9.8% year over year. There was an economist named Michael Pierce, who's with the Oxford Economist, is said that he estimates that tariffs have added 0.4 percentage points to inflation. So, in other words, it would be 2.6% without that.
Yeah.
Um, Market seemed happy with the results because, they anything that comes in less than what was expected is always a victory. But it's still the sort of the same trend. Inflation creeping up ever so slightly, but not in a concerning way. Do you see it any other way than that?
No, I think that's accurate. The big thing was like the 3% inflation still gave the Fed the green light to cut. The CME FedWatch tool is up to 99% chance of a rate cut next week and
Yep.
something like 95% of a cut in December. So
Yep.
that's really all the market was keying in on. I mean, this is September's figure, so it obviously doesn't factor in anything that's happened in October.
Right.
Oil prices are higher right now, which will, because of sanctions on Russia. So assuming those hold up, then you'll see energy sort of hit the headline figure if and when that gets reported in the future. The only reason this came out was because of the cost of living adjustment that is calculated in November for Social Security. So for as long as the government is shut down going forward, we're not going to get this data anymore. This
Yep.
is, I mean, it's tough. You're not exactly flying blind. You could go to the grocery store and price your own eggs and compare it to what it was a month ago, and people do that. So we will still get information, and people will feel it in their pocketbooks. Um, but yeah, just all we need, all the market needed from this was inflation figures that didn't get in the way of the Fed cutting, and it
Yep.
got it. So now they're content to sort of let that ride. I do think it'll, we're consumers are now paying like 55% of the price of tariffs. You said that's 0.4%. So, assuming those keep matriculating through the economy, maybe we get up to like 3.4, 3.5 in the middle of next year as consumers bear a larger burden of the tariffs that were implemented. Is that going to be enough to raise red flags? I don't know. I think the inflation ret it feels like it's done with. I think it's going to be painful. I think people are going to have to sort of muddle through it. But in the grand scheme of things, I don't know that the market is going to see a high inflation figure and sell off or anything like that.
Right. Yeah, it's interesting. It seems like since last month when the Fed started cutting rates and seemed to indicate that they would be doing so, popular opinion at least became that they were going to do so each of the remaining three. months that they, are meeting this year. And this didn't change that narrative. So, as long as a narrative is intact, and there's nothing unexpected, that's what Wall Street likes. And, it does seem like we're probably going to get a cut end of this month, is that next week?
Yeah.
And quarter basis point cut, and then also in December. And anything outside of that would be a surprise. I guess if we got a 50 basis point cut one of those 2 months, that would be a pleasant surprise for the market. But anything shy of that might actually be something that would cause markets to tumble.
Yeah, then I mean the other factor is like the political angle where Powell is out in the middle of next year. I don't know how long the shutdown's going to last. I don't think anybody does.
Yeah,
But if we're in March or something and inflation is still 3%, 3.1%, and then people start getting itchy around the prospects of maybe slower rate cuts, we then have the transition to a new Fed board chair and presumably new Fed members. We'll see, which probably facilitates more rate cuts. And then at that point, I mean, I would look at longer bonds, right? 10-year bonds, stuff like that,
yeah,
um, as an indicator of maybe what the bond market's expectation is for inflation at least.
yeah. Okay, let's move on to number three. U.S. China. This led for us last 2 weeks, I think. U.S. China trade fears. I mean, that seems to have quelled, and you can see that in the VIX, the volatility index. A week ago we sat here, it was over 20 for the first time in months. It was as high as I think 29 briefly, sometime last week. Now it's back to 16, which is about where it was a month ago, about where it's been for the last month, aside from, the week or so panic, maybe it's a little longer than that, panic about, escalating rhetoric between the US and China. Now, President Trump and Chinese President Xi are planning on meeting, I believe, next week. I mean, that can always change, who knows? But it seems like investors are convinced that that'll go a long way towards improving relations, or putting out whatever flames are left on escalating tariffs. We'll see. But for now, it seems like it's not a fear the way it was even a week ago. Do you have anything else on this?
I don't know. The rare earth thing seems to be maybe the real threat.
Mhm.
Because obviously there's a lot of sort of jockeying for position ahead of the meetings. They're off, they're on, they're off, they're on, and then we get the meeting sort of operates as expected. And that's the bluster is something that we've talked about before, and trying to position ahead of negotiations. There was there were, I guess, threats of restrictions on software dependent exports to China, but
Yep.
then I've seen reporting come out earlier today that something like that would only be done in conjunction with other other G7 countries. So
Yep.
we wouldn't just unilaterally decide to limit exports that are software dependent. I don't even know exactly what that looks like, right? Like something like a chip design that is based on proprietary US software. Does that count? Is it just going to be software products? I don't know exactly how that plays out, but that has been toned down a little bit. Um, the November 1st date was the one that was floated, right? If there's no trade deal, it's 155% tariffs. But then the president came out and said that that's not sustainable. So I think the market at least, and we probably should as well, is baking in expectations that, we'll get low double digit tariffs and that'll be it. And then a lot
Yep.
of this is posturing. So I don't know that I can't imagine what it would take to prompt another sell off like we saw in April.
No, I don't think so. Unless the meeting completely deteriorates. I mean, yeah, I still don't think it would be to that degree, but there's the possibility that the meeting is a disaster, and Truth Social gets lit up, um, or
Yeah.
you know, whatever. But for now, it seems like things are headed in the right direction. I mean, it's always very fluid. Um, I mean, China is the one country that investors really seem to care about in regard to tariffs now. They're, speaking of Truth Social, there was just a lashing out by the president at Canada for an ad that he didn't like about Reagan era, something to do with tariffs. I don't really know. Um,
Yeah.
but the
He,
market's up nonetheless. There's no fear about relations with Canada deteriorating. It's all about China. That's what people care about, and maybe rightly so, given just how much we need China really, and vice versa. Well, less vice versa, but we need China for sure.
yeah, the Canada thing was interesting. He accused them of doing a fake video. I mean, it was clipped together, like edited together intentionally,
Yeah,
where it was all stuff that Reagan had said about, tariffs not being a, a good threat and harming people, which, is
yeah.
accurate. That's how we've generally sort of assessed it. And then the president's response was no more, there's no more trade deal or no more trade conversations with Canada at all.
Are they
Um,
doing this just to draw up interest for the World Series? Toronto
I
versus the Dodgers. They
I
might.
can't imagine. So I
It
can't imagine the
helps.
president watching the World Series. The
This
attention span,
president,
the attention span required to sit through a baseball game. I don't.
he goes to them a lot. He used to go to Yankees
Does
games.
he?
Yeah, yeah. I don't think, yeah, maybe not Toronto, but it probably does help from a PR standpoint. Um, but
They,
okay, so let's
they
move
should
on.
do the betting thing where Trump bets on the Dodgers
Yeah,
and Canada bets on the Blue Jays, and whoever wins gets whatever tariff outcome they want. Like the way city mayors will do it for like the
yeah,
Super Bowl and stuff.
yeah. They used to like city mayors usually like what do they bet like their signature dish or whatever or something. Like Vermont
Mhm.
would bet maple syrup for sure.
Yeah, and Pittsburgh is like you get a crate of Primanti Brothers sandwiches or something like
Right.
that.
Yeah. What would Arizona put up? Or what would Phoenix put up? Did they put up something in the
I
World Series a couple years ago? I don't
They
even know.
did. I don't know what it was. Tortillas, maybe like
Okay.
we Mexican food of some sort. It's not. We don't really have like a signature thing.
Yeah.
Um,
Tumbleweeds? That's not
I mean,
something.
like unfortunately, it's like Bianco pizza now is
Okay.
the most signature thing we've got. I bet it was like uh local tortillas.
Okay.
Maybe I have to look that up now.
Yeah. I feel like I used to be like plugged into what those bets were. I've lost track of them in recent years. But um yeah, I wonder if there's one going on now. Okay, next up, gold and metals, gold prices. It felt a
It
few
was
days ago,
Bianco. It
this
was
felt like
Bianco. Sorry.
okay. Oh, that's what they put up.
Yeah,
Yeah.
they put up Bianco, a pizza. Yeah, Arizona known for its pizza.
Okay.
Sorry, continue.
Interesting. Gold implosion at this point is probably the wrong word. It felt like an implosion. The beginning of the week, gold prices were down. Well, right now, as of right now, they're down about 5% from the highs. But again, this was after weeks and months of just going through the roof. I mean, over 4,300 an ounce. It was a little more alarming for the miners. Gold mining stocks were down more than 10% in a matter of a day or two. That seemed to level off. There's a lot of people jumping to the gold bubble has burst. And one thing we talked about in our jump ball segment a couple weeks ago, which bubble burst first, AI or gold? I think we both said AI. But this feels less like a bubble bursting and just Cliff Droke, who's our gold metals expert, has been on here a bunch. He's the one who, said thought gold is going to 10,000 an ounce, which is the hottest defend the take ever on here. He said, looks like profit taking, which it may well be. Given the run up, it may well be. What do you think?
Yeah, I'm 100% with Cliff on this one.
Yeah.
Th
I think in the moment it felt like it's possible it was a bubble bursting situation, but giving it a day or two, it was pretty clear that it wasn't.
So for context, it's the biggest 1 day drop that gold has had in 12 years.
Yeah,
Um,
2013. Yeah.
silver also fell like 8%.
Yep.
Some of the rare earths miners and mining companies that are so gold miners, like you said, came down. They typically operate as like a leveraged play on gold anyway, so them overreacting isn't surprising.
Right.
The thing, or one of the things that has me thinking profit taking is MP Materials was a big one, right? They got the U.S. investment. They've been
Hmm.
really hot stock. They were down 28% since October 14th. which is one that we've talked about, is down 20% from the same day.
Yep.
Both are still well up. It feels like the segment got overheated and we
Yeah.
had some profit taking. The dollar is a little bit stronger right now, which is
Yeah.
a headwind for gold prices. It's up 2%, give or take, so far this month. So, there are a few factors slowing it down, but
Yeah.
I
Fear,
don't see
fears,
this
we
as a
just talked
bull.
about one of them, US-China fears. I think gold has shot through the roof as those escalated and as those have been quelled, sort of natural that people will profit take and be like, okay, I don't think gold is going, through the. I'm not as worried about these things as I was, a week ago. Gold being a traditional safe haven.
Yeah, and the safe haven catalysts are still there. It's not like we have
Yeah.
less global conflict. The
Yeah.
U.S. government, or the U.S. national debt just hit 38 trillion 2 days ago, 3 days ago.
Yep.
It's up $1 trillion in the last 71 days, I think was the stat I saw.
Wow.
Spending is not slowing down. And that's not just in the US, it's globally. So like all these tailwinds that have helped propel gold and made it a popular trade um, are still in place. It's just it got overheated. That was a huge run from gold and a huge run from silver. So a little bit of profit taking, a little bit of backing off the highs is totally reasonable. I would not be surprised if I don't want to say if it's already bottomed, but like I'm not going to be stunned if it just moves higher from here into the end of the year, close around 4,500 an ounce, maybe. I don't know.
No,
But
I'd
it
go
does
far as
not,
to say this looks like a good buying opportunity in
you know,
gold and
I
silver.
bought more gold 2 days ago.
Yeah.
Like,
Yeah. I bought silver 2 weeks ago, which was not good timing in the moment, but I still feel good about it. Still feel good about it.
yeah, that's the structural thing, right? Like the structural benefits of owning some of the precious metals. And I mean, like the inflation figures, right? At 3%. Um, Higher inflation is good for precious metals.
Yeah.
So I don't see any indication that that's going to slow down. I mean, it's not like maybe we get deflation or something if the economy really falls off a cliff, but then you've got these other catalysts for the safe haven catalyst.
Yeah.
Um, yeah, I don't think the bubble's burst yet. I don't think it's a
No.
bubble.
Yeah, you may be right. It is just still it's just disorienting to see both gold and stocks, rising in tandem. This is a rarity. And it does feel like one of them has to, back down at one point. It feels like stocks are more likely, but we'll see. Well, I mean, maybe this can, this, as we've said many times, our former Cabot boss Tim Lutz used to say trends last longer on Wall Street than anyone expects. Maybe this is one of them. No one expects gold and stocks to continue to rise, in tandem for very long, and yet here they are, and they continue to do so. So we'll see.
I do want to flag one other item. Gold at right now it's 41.40 an ounce. On October 13th, it was 41.33. So gold has given back 11 days worth of gains.
Yeah.
That's it, right? Like
Right.
let's take a little bit of a step back. It's a big 1 day move, but it's not
Yeah.
undercutting the rally.
Yeah. Well, speaking of temporary big moves in one direction or another, there are a couple stocks that look like new meme stocks that exploded in a matter of a couple days, but have also come back to earth a little bit. That's Beyond Meat, BYND, and Krispy Kreme, DNUT. Uh, Beyond Meat was up more than what, 300%? More than that.
900.
Yeah, that's it. In the last 5 days, it's up over 300%, but at its peak over 900%. DNUT was, a little more muted than that, but both exploded. Both have since come back to earth, and Beyond Meat's down 10% today. And that's after a couple down days. Krispy Kreme down about 8% right now. We've talked about this goes to my nihilistic thing, like what matters. We've talked about, a series of meme stocks popping up, a couple months ago, being a potential yellow flag at least. I don't know what this means. Um, I really don't know what this means. I don't think I don't even think it's a yellow flag for the market, given how short-lived the run-ups were, even if, 900% is a lot. But I don't know. What do you think this is a bigger deal?
No, it is a symptom. Like that the nihilism thing that you're talking about, it's sort of a symptom of um a market with a short attention span that's a little bit decoupled from reality.
Yeah.
Um, we had an open door, what, a month ago where that was running up. Um,
Mhm.
so they popped in open door popped in early September. Um, open door had its meme stock run up and then it fell off as people piled into Beyond and Beyond Meat and Krispy Kreme. And now it's up 14.5% today. So it does
Yep.
seem to be its own form of like meme stock rotation.
Yeah.
So the GameStop saga was buy and hold on to shares. It doesn't matter what the price does. And this feels a lot more uh, fickle.
Yeah.
It's people just jumping on whatever the next opportunity is, whatever the next big thing is.
Yeah.
Um, I do think beyond it, there's a little bit more of an interesting case for it. Both of them were added to the meme ETF,
Hmm.
which was shuttered in 2023 and was relaunched on October 8th. Um,
So maybe that seems like a bigger yellow flag than, any one meme stock.
yeah, probably. But like we have like 900 leveraged ETFs now. There's more ETFs than stocks.
Yeah.
There's all these sort of derivative financial products that are out there that sort of get to that get to that nihilism thing for me as well, where it's like, fundamentals for these derivative products, these highly leveraged plays, these stock specific ETFs, like fundamentals are irrelevant there. It gives the impression of just being a big casino. And,
Right.
it's like, well, some people like leveraged Tesla, other people like leveraged artificial meat stocks. It's really just a matter of personal preference.
Yeah.
Um, the Beyond was kind of interesting because that stock had gone from $3 a share, give or take, 285 on Friday, September 26th. And that got actually hammered by short sellers. That was down to 52 cents a share
Yeah.
on October 16th.
I was going to say, for
Which,
perspective, that the stock is still down, even with this run up. It's still down 31% year to date. And Krispy Kreme, by the way, is down like more than 65%. So
yeah,
just looking at, the broad picture. But go on.
so that one, the Beyond makes a little bit more sense to me. It was up to like 65% shorted. I saw commentary that it was maybe over 100% shorted at times during the run up. Um, that one was just like a legitimate short squeeze candidate that somebody caught and then they flagged. And that seems to be sort of resolving. I don't think it's like a big structural thing like GameStop
Yeah.
supposedly had or maybe actually had. Um, but yeah, it's the casinoification of things. I don't love it, but I haven't loved it for a while.
Yeah.
Um,
What's that
you
meme stock ETF? What's
Meme, Meme.
makes sense. Look at this thing.
I was gonna say, when did that launch originally?
Hmm. It says, let me pull up the chart here. Yeah. Hard to, right now the chart is only showing from,
The
when
relaunch, yeah.
relaunch. Um,
Um,
yeah. Hmm.
December of 2021.
Okay. So yeah,
So,
like almost a year after the meme stock craze. Um,
yep. So December of 2021 though was right at the peak. The market peaked like
right. Yeah.
December 31st.
Yep.
or so of 2021 before things started heading lower. So if it is if it is an ominous
Yes. That, like
development,
I
then
said, that seems more yellow flag than any of these individual Open Door, Beyond Meat, Krispy Kreme, whatever. And you saying December 2021, yeah, that literally was at the peak. Um, what did you say they shuttered in 2023 sometime?
yeah, they
Shortly
shut
after the
down.
market bottom?
I know it was 2023. I'll have to find the
Okay. Yeah. Interesting. That's a ETF worth keeping an eye on. Just
November of 23,
okay. So
November of
at
28
least
of
the bull
23.
market had been back for like, a year or whatever, technically, even though it, maybe it didn't feel like it. Um, okay. Well, yeah. Meme stocks. Yeah. Meme ETF, I think that's worth at least keeping an eye on. I'm glad you flagged that. Before we go, I wanted to mention today's offer. We are offering Cabot Explorer, which are our global stock investing service run by Carl Delfeld, who was on here just a couple weeks ago. If you go to cabotwealth.com/street, we are offering Cabot Explorer for 65% off the normal price, $697 for the year. You get a 30-day, 100% money back guarantee. If you want to try it out for 30 days, see if it's for you. What you get are weekly issues and updates. There's something every Thursday, issues twice a month where Carl will pick a new stock or ETF. Speaking of ETFs, he has, I think, the most extensive ETF portfolio of any of our analysts in his portfolio, and it's really his write-ups about what's going on in the global economy, the global market are really interesting. His portfolio has done quite well. I think at last count he had five stocks in there that had at least doubled. I think one of them at least tripled. And you also get free special reports, the story and the numbers, how to evaluate an IPO, and how to profit from the great rebalancing, which is a concept Carl's talked about on here. So much of the global market is in, I think it's like north of 60% is in, maybe even 70% is in US stocks, and that will have to sort of rebalance, because the US economy only makes up uh,
25% or so of global GDP.
25%, population is like 4%. So anyway, cabotwealth.com/street, go there and you get 65% off the normal price for a year subscription to Cabot Explorer. I would highly recommend that. Any final thoughts before we close out? What matters? What matters in this market? China. I think China matters.
Sentiment. Sentiment is all that matters right now.
Sentiment.
Yeah. I yesterday or a couple of days ago I was looking to see I'm like, okay, so Benjamin Graham, father value investing, grandfather value investing, has a specific set of criteria that he looks for that make a stock buyable. So
Yep.
I was going through screening for stocks. I don't know if there is a single stock out there that Graham would like enthusiastically buy. I think
Right.
there's a few that he would maybe hold his nose and buy. But we talked about with Tesla, the valuation stuff seems irrelevant. There has been a lot of his value investing dead. I mean, that's been going on for like 15 years. It's all sentiment. It is all
Yeah.
attention. That is what matters right now. So it can be tough it is a tough market to trade if you are looking at things other than, if you're looking at fundamentals or business models, it is a tough market to trade. I will say that much.
Yeah. But, again, this is it's better to be nihilistic on the way nothing matters and everything's just going to go up than the reverse of this. We probably felt the reverse of this late 2022. Seemed like, nothing would cause it to go up, but fortunately we didn't have a podcast at that point. Someday. But well, thanks everyone for joining us, and we will join you next week. Halloween, my favorite day of the year. We will join you next week for another edition of Street Check. See you then.